Hello and welcome to the Checks and Balances podcast. This is Tyler Curley, financial advisor, accredited investment fiduciary. Today I'm going to talk a little bit about life insurance. Why do you need life insurance? Life insurance has several purposes. Its most important function is to replace the earnings that would cease at the death of the insured. For businesses, life insurance is a way to protect key employees and the business itself. A third purpose is to use life insurance to pay potential estate taxes. Honestly, that is a situation that does not come up very often. If you die during your earning years, your family could suffer a severe economic loss as a result of losing your current and future income. Unfortunately, your family would still have to pay its regular bills, the mortgage, and outstanding debts, and perhaps even continue saving for college and retirement. Unless you're independently wealthy, achieving these goals may be virtually impossible for your family with the loss of your steady income. Life insurance offers a way for your family to continue living comfortably and without worry. Employers often purchase life insurance policies on key employees to insure against the loss of services or income that might result after an employee's death. Here, the proceeds from the policy are paid to the company. Life insurance works for business partners too, where one business partner purchases a policy to insure against the financial loss that might result from the other partner's death or to buy out the partner's heirs. Again, we talked about this a little bit earlier. Life insurance is also used to pay potential federal estate taxes. Since these taxes must be paid in cash, life insurance is a good way to ensure the fulfillment of this obligation. But also, like I said, there's just not that many people that are going to have that issue. There are many different types of life insurance: whole life, universal, term, numerous kinds with numerous different cost structures, how long they last. The cost and availability of life insurance can also depend on your factors such as age, health, and the type and amount of insurance that you would purchase. Let's look at an example of someone from a need standpoint on how much life insurance they would actually need. So let's take an example of a family that needed $3,000 of expenses paid for after taxes, not including the mortgage. They have 2 kids, about $65,000 in available assets, whether that's, call it a reserve account, savings account, mutual funds, cash in the bank, along those lines. Let's assume a 3% inflation rate. We're also going to assume that the income of the $3,000 needs to last for 2 years. So in this scenario, we've accounted for paying for education for 2 children. We're funding a reserve account. We're paying an outstanding mortgage off. Let's assume that mortgage is $175,000. There's also $25,000 in other debt, such as credit cards or car payments, and the cost of a final illness or a funeral expense of $15,000. If we look at all of that, we're going to need $537,000 of life insurance. Most Americans are vastly underinsured. I went through just a typical scenario of ABC family in America. 2 kids, a mortgage, car payments, credit card payments, and they have a little bit of money saved. At the point of an untimely death, these people would need $537,000 of life insurance. And you know what? Most people I sit down with don't have that much life insurance. If you need an analysis on your life insurance, just send us a message or call us at our office, 252-215-2241. Again, that's 252-215-2241. Also, like us on Facebook, Curley Financial. Thanks for listening to the Checks and Balances podcast. Again, this is Tyler Curley. Enjoy your week.
Advisory Security services offered through Capital Analysts or Lincoln Investment, registered investment advisors. Security offered through Lincoln Investment, broker-dealer, member FINRA-SIPC. www.lincolninvestment.com. Robinson & Associate and the above firm are independent and non-affiliated. The views and opinions expressed herein are those of the authors noted and may or may not represent the views of Capital Analysts or Lincoln Investment. The materials presented is provided for informational purposes only. Nothing contained herein should be construed as a recommendation to buy or sell any securities. As with all investments, past performance is no guarantee of future results. No person or system can predict the market. All investments are subject to risk, including the risk of principal loss.